Good morning, everyone. Welcome to the Northern Virginia Housing Expo workshop on homeownership programs. And these are programs that are inside the Beltway. We're really excited to have you all today. And we are going to have 5 presentations. We will have 5 panelists and we'll go ahead and get started. Our first panelist is going to be Belinda Falamola, and she is here. She's the FHA insured mortgages from HUD, Housing and Urban Development. And she is going to be our first panelist of the day. And please go ahead and take it, Belinda.
Thank you, Dana. Yes, I'm so pleased to be here. I just want to first thank Laura Nichols and her team that have done a great job all year long in putting on the Northern Virginia Housing Expo. As Dana said, I am representing the U.S. Department of Housing and Urban Development, and I'm going to talk about FHA insured mortgages. I just want you to know that I'm coming from the perspective that as a first-time home buyer, or even possibly a second-time buyer, that you probably have already gone through the whole idea of, do I want to purchase or not? And hopefully that you are attending this particular presentations of all of us because you've decided that you're going to go for it because you've heard all the stories about the market. You've talked to a housing counselor, hopefully. You've done all your research. So now you want to know about your options. So this is what I'm here to do today, is to show you one of the mortgages that you might want to consider. I want you to know that I am an FHA mortgage insured mortgage holder. So I know the benefits of it. And I'm proud to say I am a third-time homeowner, and I was also a first-time home buyer. So I've gone through the process. I understand it all. And so I'm giving you the benefit not only of the information I'm going to share with you today, but also my experience. So give me a moment and bring up my presentation. So like I said, this is going to be about the FHA insured mortgages, and I'm with the U.S. Department of HUD. And so we are in a new administration, so I just kind of wanted to get a glimpse of the people that are in charge. We have Secretary Marcia Fudge, the person that's in charge of the principal director, that's Ms. Turner, and then Marvin Turner, who is the director, who's my boss. So first-time buyers, what is FHA? That's what we're going to talk about today. What is a first-time home buyer? Why would you choose an FHA insured mortgage? What is the difference between an FHA versus a conventional mortgage? And because of the dynamics of what's been going on since 2008 and the crisis that we may be going through now, people may want to know, and you never know what the future may hold. Can I purchase after a foreclosure? Can I use an FHA mortgage? Can I purchase after a bankruptcy? And then what is the importance of a HUD-approved housing counseling agency? So let's talk about what an FHA insured mortgage is. So I want you to understand that FHA does not give out mortgages. You don't come to us and we don't approve your mortgage. What we do is insure mortgages with a lender. So we protect a mortgage in order for lenders to be protected. So if a homeowner, for whatever reason, defaults on their mortgage, we make sure that the lender does not lose anything, that they're protected, and we will pay them a claim. And so if they believe that if a lender believes that they're going to be protected, they're more willing to give out more mortgages. That is why most of them want to be an FHA lender. So what is the definition of a first-time home buyer? You may have heard a lot of definitions of a first-time home buyer, but FHA has a particular definition of a first-time home buyer. Of course, when you want to use an FHA mortgage or insured mortgage, you have to make sure it's going to be for your principal residence, and you can use it after you have purchased a home 3 years later, okay? So you may live in a home and you may have sold a home, but 3 years, 6 years, 7 years later, you can come back and then want to buy another home, your principal residence, and you can be considered a first-time home buyer and have the opportunity to use all the benefits associated with a first-time home buyer. An individual who's never owned a principal residence at all, of course, that makes sense. And listen, anyone who's a single parent who owned a home with their ex-spouse. So that means that you may have been married, but now you're a single parent. Your name was not on the mortgage or the deed. You could be considered a first-time home buyer. And a displaced homemaker who only owned a property with their spouse. So you have different opportunities to be a first-time home buyer. So why would you choose an FHA insured mortgage? Well, first of all, they have a low down payment requirement, only 3.5. Lower credit scores. Most of the conventional mortgage are at 620. Now, you hear that FHA only requires 580 score. However, there are things called overlays, which means that if you go to a lender, they may say, yes, you are qualified at 580, but we may want you to have a 620. But we do want you to know that if you shop around, you can find lenders that will stick with the 580 as an FHA credit score, and that will get you in the door. You can still be able to get an FHA mortgage after foreclosure or bankruptcy, and we'll get to that later. You can have a non-occupant co-borrower, and that can be a relative who can help you qualify for a loan. Usually an FHA loan has a lower base interest rate, and we'll show you that in a moment. For those who, most people that have FHA loans somewhere down the line, maybe 10 or 15 years later, they want to refinance. FHA loans are eligible for streamlined refinancing, which is very important when you want to refinance your loan. Closing costs are higher under FHA loans. And what does that mean for you? That means that you can have a seller give up to 6% of your purchase price. That means the seller said, look, I really want this, I really want to sell this house. I'll give this potential buyer 6%, this bottom line number, toward their closing costs. So that'll help you in getting you over the barrel in purchasing your home. And you can get your entire down payment assistance from your friends, your family, your employer, your church, or any other approved organization. So FHA gives you all these opportunities to purchase a home. So here's a chart that'll show you a difference from an FHA and a conventional loan. Now, one of the pros and cons, you can see the pros, that it's a government loan, so you know you have that assurance that if something goes wrong, that FHA will have your back and they'll do everything they can to assist you to keep you from foreclosing. The minimum down payment may be high, but we also have the opportunity to have a lower credit score. However, one of the things that's not very good, so you know everything is not perfect, is that FHA has a mortgage insurance, which is usually for the life of the loan, and we'll talk about that in a minute. So some people who have a really great credit score, way above the 620, they may not want to do FHA, they may do conventional because of the PMI. So these are the reasons why you have to have your choices, you have a conversation, and you make a decision if based on your current lifestyle and your current would you want to do, an FHA or a conventional loan? This chart will be given to you later, but as you can see, with an FHA, conventional 5% down or 3% down, at the end of the day, based on the FHA upfront PMI, you have to have a down payment, but conventional, you don't have an upfront, but your interest rate may be lower with an FHA, but at the end of the day, FHA down payment may be lower than a conventional, and if it's a 5% down, but a conventional may be lower if it's 3% down, simply because of not the need of the upfront insurance requirement. I just want to say that this information will be available for you to on the website after today. So you can look at this chart closely, and you can see how the difference of the PMI and interest rate and help you make a decision whether you want FHA or conventional. So these are the FHA requirements for 2022. It's basically what I had said before. One of the things that's going to be different is that the mortgage insurance premium, FHA collects it a one-time upfront payment, and then there is an annual premium that is for the life of the loan. One of the things also that FHA, they do make sure that they check all your documents, make sure that you have proof of employment, not anything really much different than what they did in 2021, but we just want to make sure that you understand that the mortgage insurance premium is one of the things that you need to consider when you want to do an FHA. So, student loan debt. I did want to put this in there because, you know, a lot of millennials, they want to purchase, but they know they may have a heavy student loan debt. So FHA is trying to do everything they can to ensure that they have an opportunity to purchase a home, even if they have student loan debt, whether it's deferred or not. So in general, the bottom line is that the mortgagee, they can look at what is the base monthly payment, and they can use that as whatever's on the credit report, or if it's zero, they will use whatever documentation shows what the borrower's credit report will show of evidence of the outstanding balance. And then whatever the outstanding balance is, they will take a 0.5% of that outstanding balance. So it used to be 2% and then 1%, but now it's down to 0.5%. So they've lowered it, so it makes it much easier for someone with student debt to still have an opportunity to purchase a home under FHA. So as I said earlier, you know, FHA and foreclosure, yes, you can still purchase a home. If you've had a foreclosure, a waiting period is 3 years at the time that FHA has paid the claim. So you may have foreclosed in June of 2021, but FHA may not have paid the claim until December of 2021. So that December 2021 is when the 3-year clock starts. If you've had a Chapter 7, you can still be eligible for an FHA loan after it's been, Chapter 7 has been discharged after 2 years of discharge, okay? So you still have an opportunity after Chapter 7, after Chapter 13, you can still, the beauty of the FHA loan, you can even apply for a FHA loan while you are in the repayment plan. The only thing you have to do is that your lender will have to get an agreement from the bankruptcy attorney getting permission that you can take out a loan, okay? But if you have successfully already completed your repayment plan, there is no waiting period if you've done a Chapter 13. So what do you do now? I'm a first-time home buyer. You have all these questions. Where do I start? Where do I begin? Do I have a good credit score? Do I have enough money? What will be my down payment? What is my closing cost? Where do I start? So where you start with a HUD-approved housing counseling agency. They provide services. It is our HUD grantees that we help them help you. We provide them funding so they're trained housing professionals in all areas of home buying, financial literacy, credit counseling, budget, and everything else. What most people don't say about housing counseling, everybody talk about how they help you with pre-approving, getting you into a house, pre-purchasing. What they don't say is that housing counseling is there to help you throughout the entire life as a homeowner. They talk about how they help you during the process of being a home buyer, but they're also there to help you in the process as a homeowner to make sure that, because people have life changes, unexpected life changes, they're there to help you to, at all possible, to remain in your home. So they provide one-on-one counseling. They'll look at all the documents. One thing about buying a house, you're going to have a lot of paperwork. Sometimes it's not very easy. So if you don't understand something, that's what they're there for. They help you to understand all the paperwork, all the questions, everything you have to do. They're also there to help you create an action plan to lay it out for you, everything that you're going to need to make sure you get from point A to point B, to make sure you get the keys to the house that you want. They'll look at your credit report. That's going to be important. If you have anything problems on your credit report, they're going to help you try to clean it up. But one of the most important things is your budget. Make sure that you're going to have not only the money to purchase a house, but have enough money after you get into the house. A lot of times people are going to have to tighten their belts. They're not going to be able to buy that Maserati before they purchase the house, and they may not be able to buy the Maserati after the house, maybe a year later. But the point of it is they're going to help you to understand all the things you're going to need to do, because when you purchase a house, you have a lot more obligations and responsibilities, and they're there to help you to understand that. So these are some few steps. You're going to choose a housing counselor. You're going to get your real estate agent. You're going to home inspection. I told you that I had some experience. Let me tell you, I looked at 10 homes, and every home that I looked at, I had to get a home inspection, and I had to pay for those home inspections. But I'm going to tell you, every house that I thought I wanted looked great, right? But when I got that home inspection, it made me realize it wasn't the right house for me. I'm telling you, a home inspection is one of the most important things you can do. It is an investment. So I didn't complain. I used the same inspector every time, and he would laugh. He said, "Okay, what number is this?" And so, but I'm telling you, it was really worth the time to get a home inspector, because if I had not, I would have been in much more trouble at the end of the day. So let's talk about fair housing really quick. We're hearing a lot of information about appraisals and the bias of appraisals. I'm not going to go to it real heavy, but I do want everyone to know that people of color may be a victim of appraiser biases. So if you believe that you are, HUD is there for you. So the number is here. Contact our fair housing office. Let them know that you believe that you may be a victim of a fair housing discrimination during the appraisal process. You don't have to prove anything. You just give them what you believe is happening, and we will do the investigation. There's no charge for that. Fair housing is very important. I always want to make sure people understand that you have a right to live where you want. And this is the avenue that we have available. Secretary Fudge has made it a point to bring this out, and this is a new initiative for her. So we just want to make sure and let you know that we're there for you if you should encounter this type of discrimination. So down payment assistance, there's one in Virginia. And so your Virginia Housing Down Payment Assistance Program is available. So please reach out. There's the website. Talk to them. They'll tell you how to apply. And housing counselors in the Virginia area will definitely know about this Down Systems of Payment program. And it is very important. It will get you over the hump. So here's some websites. Obviously, I'm talking about Housing Council again, how to buy a home that holds all of the steps. Everyone heard of HUD foreclosed homes. That is another opportunity in considering and purchasing a home. I've also given you the Fannie Mae and Freddie Mac foreclosed homes. That's another way to look at a different set of homes that you may want to purchase because of the environment and the market that we're in. That may be, those three avenues are available to you. So thank you for your time. There's my information. And I wish you the best. And I know that if you decided to purchase a home, it may take you a little while, but I know you'll be successful with all the steps that are provided and all the assistance that HUD or Housing Counseling Agency will give you. Have a great day.
Thank you, Belinda, for that excellent presentation. And I just wanted to remind all the attendees that this presentation will be available later today at the Virginia Housing Expo website. And we will save questions to the end of this presentation. We'll have about 15 minutes for Q&A. And this ties in nicely. Our next presenter will be Regina Pinkney, and she's the Business Development Officer at Virginia Housing. Take it away, Regina.
I am on mute. Sorry about that. I was on mute. Thank you all for having me here today. Thank you, Laura Nichol, for inviting me. I'm super passionate about affordable homeownership, so I'll get right into it. I work for Virginia Housing, which is formerly known as VHDA, the Virginia Housing Development Authority. We've been around since 1972. We were created by the Virginia General Assembly in 1972, and we are a not-for-profit organization. Our mission is to support Virginians in finding affordable, stable housing. I am from the homeownership division, and so that's why I'm here to talk about homeownership with us today. So, again, as I said earlier, we are a not-for-profit organization, which means that our mission is really consumer-centered. So sometimes folks will think that our financing products are too good to be true. And I assure you they're not. I was a loan officer for 15 years before coming over to Virginia Housing, and actually became a loan officer because I learned about VHDA loans at that time and what they did for our community, for everyone in our community. And that was just so important to me that I became a lender to use their products, and now I work with Virginia Housing. So let's talk about eligibility and qualifying guidelines for our products. And again, like FHA, you do not generally come to us directly for a loan, but we have a list of approved lenders that we vetted. They can be found on our website at virginiahousing.com. And those loan officers and lending companies have been trained to provide you with access to our products, our loans, our grants, our specialty products. So let's talk about our requirements to become eligible for those tools that we use to afford to give you access to homeownership. So the first is you must be a first-time home buyer. Now, our definition of a first-time home buyer is very simple. You cannot have lived in a home you've owned in the last 3 years. You cannot have lived in a home you've owned in the last 3 years. So who does this help? Military folks. They bought a home in Texas, but they've been living in Virginia. They're going to be in Virginia for quite a while, stationed in Virginia. And so if they have rented for 3 years in Virginia, they are a first-time home buyer all over again, and they have access to our product. So that's something to remember, that the definition of a first-time home buyer. Now let's talk about some of the eligibility requirements. On top of the first-time homebuyer requirement, we have a homebuyer education requirement. And that's very important, not only for the loan process, but for you as the consumer. The more you know going into the process, the easier the process will be for you. Virginia Housing offers a free homebuyer education course, and it is offered in person throughout the state as well as online, self-paced, and it's 100% free. We also accept certificates for homebuyer education from HUD-approved housing counselors. Now, we have income and sales price limits. Your income cannot exceed the maximum household income limit, and the sales price of the property you want cannot exceed our limit. You'll see that in Northern Virginia, and that's the Washington, Arlington, Alexandria region that you see at the top here, our income limits are very high, as well as our sales price limit. So from Fredericksburg up to Arlington, the sales price limit is $550,000. That's the maximum. We do not have minimum on income or sales price. If you can qualify for a property using our product and you are eligible, your income, your minimal income is not relevant. If it can be done, we can help you do it. Excuse me. You'll see that our income limits are separated into two different categories, 2 or fewer, 3 or more. And then those categories are broken down into standard and with housing DPA or CCA grants. Now, both of those are grants, and so you'll notice our grant limits are still very high. In fact, I believe they're the highest in the state, the highest income limit where one can still receive assistance to purchase a home for free. And that's exactly what our grants are, 100% free. And I'll talk a little bit more about those later. So let's talk about the benefits of working with Virginia Housing. As a lender and now as an employee of Virginia Housing, I see that, I believe that the choices that we provide first-time home buyers are just top-notch. We have so many different ways to say yes. We have ways to get you close to or above 100% financing with very respectable and attainable credit scores. So that's one of the main benefits about working with us. Now, DPA, free money is my hobby. So I love this part. Our down payment assistance, it's flat. It's not tied to your credit score. It's not tied to your interest rate. It is truly altruistic in that no matter what type of loan you're doing, conventional or FHA, no matter what your credit score is, you get the grant and it is forgiven at settlement. When you get the keys in your hand, we forget about it. It's not recorded anywhere. If you're doing a conventional loan, we give you a 2% grant so that all you need is a 97% first mortgage, a 2% grant from us, and then 1% of your own funds to cover 100% of the cost of the home. We do it similarly with FHA, but since FHA requires 3% down, we give you a 3.5%, forgive me. We give you a 2.5% grant. So whether you're doing a conventional loan with a 780 credit score or an FHA loan with a 640 credit score, you still only need 1% of your own funds. And when I say your own funds, what I really mean is funds that have been given to you. So that 1% can be a gift. It can be from your 401k loan. It can be from another grant program. Okay? As long as your loan to value is not greater than 10%. And basically that means that if you can put 10% down without us, you probably don't need us. Because there are a lot of folks out here that can't put that much down. Now, what about the folks who use our loans like our VA loan or veterans loan, which is 100% financing, or our rural housing loan that is also 100% financing? They don't need a down payment. So what we've done is created a closing cost grant for them, or our CCA, closing cost assistance grant. And that is 2% of the sales price or appraised value, whichever is lower. And be mindful of that because that's the standard that lenders use throughout the country. The lower of the appraised value or sales price to base grants on. All right. Now, what if your income is above the grant limit and you still need 100% financing? And let me not say need, let me say want. Because if you take 10%, let's say $30,000 of your own money out of your bank account and put it down on a home, you've diminished your cushion, your safety net, right? But it's the same home. So if you can do the home with 100% financing, then you get to keep your cash in the bank, you get to keep your safety net in place, or more of it, let me say. And it makes home ownership a little bit more stable for most. So if you make too much money to qualify for our grant, we have a second trust mortgage that will give you, with minimum scores of 620, 100% financing. With credit scores at 680 or above, you have access to 101.5% financing, 101.5. And you have the option to use FHA as the first mortgage or conventional as the first mortgage, whichever suits your needs best. So why would anybody want 101.5% financing? Well, no matter how much you put down on the house doesn't really change, especially if the payment for 100% financing is comfortable for you. So when you're out there as a first-time buyer shopping, it gives you more wiggle room. If you can finance 100% of the house, if there's competition for the home, you have more wiggle room to increase your offer, to be more aggressive because of your strong financing and the fact that you do have money in the bank that you were planning to use to buy a home in the first place. So we have our grant for closing cost assistance and down payment assistance. And if your income is too high, we have a second mortgage that will help you. Now, let me tell you, our second mortgage is a 30-year fixed mortgage at the same interest rate as the first, with no prepayment penalty. So you can get that second mortgage, and as your income goes up, hammer away at it, pay it down, and start really working towards building your equity in your property. Now, this is another specialty program, our mortgage credit certificate. And we have the ability to distribute mortgage credit certificates, which is a product from the IRS, honestly. And what it does is it converts, for every holder, 10% of the interest that they pay in mortgage to a dollar-for-dollar federal income tax credit. So you still get to deduct 90% of the interest you paid on your mortgage annually, the way we're all used to. But then 10% of it it gets a shot of steroids and becomes even more powerful. It has a greater dollar-for-dollar effect on your tax liability. So if the IRS says you should have paid us $17,000 this year and 10% of the mortgage interest you paid is $2,000, then after you use that tax credit, you will only owe the IRS $15,000. Now, that's a very simplified explanation, and we have some great videos that explain the mortgage credit certificate on our website at virginiahousing.com. So do stop by and check that out. Now, Spark. Spark is sponsoring partnerships and revitalizing communities. And what it is it's a way of us helping communities throughout the state of Virginia facilitate housing, healthy housing, staple home ownership in the way that they need best. And our community leaders and our community volunteers and our HUD-approved housing counselors throughout the state, they know what their communities need. So what Virginia Housing did was we set out an offer that says we will discount interest rates by 1% for members of your community if you wish. Just tell us how many loans you want us to discount by 1%. And so we have a list of Spark sponsors throughout the state of Virginia, and those sponsors are what they do is they distribute the Spark. Now let me share with you an example. If today's interest rate with Virginia Housing was 3.25%, and your loan officer reached out to one of these Spark sponsors and asked them, hey, does my client qualify for Spark? And the answer is yes. They would send the Spark reservation to the sponsor on the list and then reduce your interest rate by 1% for free. So you can have 100% financing with our first and second, and then add Spark and knock the interest rate down by 1% for free. Or you can have a first trust, our grant, add Spark, and still knock the rate down by 1% for free. Now, Spark is a first come, first serve program. So some localities may run out of Spark faster than others. That's why it's important for your lenders to reach out to the sponsors and make sure that you're eligible and that there are still funding available. So let's take a look at what Spark can do. Now, what you see here is a combination. And one of the things I learned as a lender and the things that I'm trying to share with everyone is that Virginia Housing isn't just, you don't have to just stop there with our financing. There are other programs throughout the state that when we combine, when we work together, we make magic for Virginians when it comes to home ownership and affordability. So this is an example where I've done just a regular Virginia housing loan with 3% down, conventional loan in the regular daily rate. No special benefits attached. You see our sales price up here is $500,000. We have our closing costs and escrows. We have our deposits, our little contributions from the homeowner, and then we have a $485,000 first mortgage. But cash needed at settlement is $26,255. Our interest rate is decent. It's 3 3/8, very good. We see our principal interest, and then look down here at our total housing payment. And of course, at $500,000 in Arlington, we made this a condo, so we have a $350 condo fee. So now, look at our total housing payment, or what lenders will call your PITI, right? Your PITI. So your PITI is $32,1483, right? Not too shabby on a $500,000 home. But then when we work together with, say, you get a Arlington County assistance called MyTap, then the numbers change drastically. You still have the same sales price, similar closing costs, and the change in closing costs is due to the change in the loan amount. And then the same deposits. But now look at this first trust mortgage. It's dropped by $85,000. Then you have a silent second from Arlington at about $185,000. And suddenly you no longer need $26,000 to get into your home. You need about $2,200 more to get into your home because you've already spent this $2,000 here, and then another $950 here, and then cash needed at settlement $2,191. Whoever thought they could buy a $500,000 house with $5,000 out of pocket? Not me before getting into lending. And so, forgive me. Let's see. All right. So now we make this deal even better. We've saved about $24,000 out of pocket up front, but then let's do more. Let's apply Spark. You see the rate went down from 3 3/8 to 2 3/8, or 2.375 to 30 years fixed with no points. That's important. No additional fees to get that discount in rate. Okay? And look at what that does to your housing payment. It drops it from $22.14 to $23.50 a month. That is affordability. Saving you, the consumer, $24,000 plus or minus up front, and then up to $10,000 each year you live in the home. You avoid the cost of an unnecessary refinance because the rate is already 2.375. Your mortgage insurance, it doesn't exist because you have that hefty down payment from Arlington County, and then you still get to take advantage of the 10% MCC or mortgage credit certificate every year that you live in the home for the life of the loan. And Arlington's program is dynamic, but don't forget to check around with other localities where you live and where you work in order to see if they too have assistance like this to offer to you. Thank you so much for your time. And for more information, please reach out to us at virginiahousing.com. Thank you.
Thank you so much, Regina, for that presentation. You're always so passionate about it. Appreciate that. So we are going to move on. We're moving through localities, and we're next going to move to Alexandria. And we have Vincente Espinosa, and he is the Housing Program Analyst with the Alexandria Office of Housing. So take it away, Vincente.
Thank you, Dana. My name is Vicente Espinosa. I am with the City of Alexandria Office of Housing. The City of Alexandria Flexible Homeownership Assistance Program provides a second trust loan up to $50,000 in deferred payment, equity share, 0% interest financing. Income limits depending on the program up to 100% of the area median income, 129,000 for a family of four. Assistance may only be used to buy properties that Office of Housing market for sales. The City of Alexandria Homeownership Resources. City of Alexandria can provide assistance toward the purchase of affordable Serasa units and resale restricted homeownership units. You may want to know the difference. The difference between those two is that under Serasa units, the units are affordable only for 30 or 40 years. And also the units have a huge discount from market value. For example, a unit, the market value might be like 600,000. Buyers can get those units for 175,000 to 325,000. And under resale restricted, those units don't have, some units don't have a discount. And those units that have a discount, the discount is very minimal. It can be anywhere from 5% to 10% of the market value. Additionally, those units are affordable in perpetuity. That means forever. So obviously the better units are the Serasa units, but the problem is that we don't have too many units, affordable units. Basic eligibility requirements the buyer must be a home first-time buyer. It is defined as no prior homeownership interest in the last 3 years, unless it is due to a divorce. If it is due to a divorce, then we would assist the person, provided that there are no interests in homeownership. The applicants must live or work within the City of Alexandria and have a gross annual income within the current limits, and complete requirements, home buyer training and counseling session. The training is done through Virginia Housing. Is free of charge to the applicants, and the counseling session is required 2 hours of counseling session. Usually, we require the counseling session after the person has a ratified sales contract. Again, for the counseling session, there is no charges. The income limits, for one person in the household, the income cannot exceed 57,560. And if the income is between 57,651 to 72,240, the person can get up to 40,000. And if the income is between 72,241 to 81,270, for one person household, the assistance can be only up to 30,000. And if the income is between 81,271 to 90,300, the person can receive up to 20,000 in assistance. Also, I want you to know that, as Regina said, that they have a Spark. What Spark does is that if the buyer gets the loan through Virginia Housing, they can get 1% discount on the interest rate. So all the applicants, if they buy one of the city's properties, they get Spark 1% discount. So if Virginia Housing has the interest rate, let's say 4.5% through Spark, they can get it at 3.5%. For additional information, contact the Alexandria Office of Housing at 703-746-4990 or visit our webpage at alexandriava.gov/housing. Or also sign up for e-news so that you can get information about the properties we market for sale. The way how you sign up for e-news is that you go to the Alexandria's webpage, and then you type e-news on a search box, dialog box, and then you can just sign up for e-news. Okay, so I understand questions will be answered at the end of this presentation. So thank you.
Thank you, Vincente, for that great
Yes.
presentation.
Thank you.
We are now moving to Arlington, and we have Akiria Brown, and she is the Homeownership Program Administrator for the Arlington County Housing Division. Take it away, Akiria.
Thank you so much, Dana. Again, I'm Akiria Brown, and I am the Homeownership Program Administrator in Arlington County. To reiterate my colleague Belinda's sentiments, wanted to just thank Laura and her great team for putting on such a wonderful event. And I know that this is a lot of great information, and thankfully that this information is it will be available after the presentation so that you can just kind of look through the slides and see what works for you and see what the offerings are throughout the region. Also wanted to just thank Regina Pinkney with Virginia Housing for highlighting some of the ways in which Arlington's programs can work with Virginia Housing's programs. And I know that those programs work so well throughout the region, and they're such a benefit to so many potential home buyers. So I'm really ecstatic to be working with her on a regular basis. So without further ado, I'm going to go ahead and jump in. There's a lot of information here. There's absolutely no way that I can get through all of this information. And again, the slides are available. I will just be highlighting some of the primary aspects of our programs, just to give you an indication of what's available in Arlington. So I'll be covering our down payment assistance programs, the Virginia Housing Spark program, and our affordable dwelling units. And we have an affordable dwelling unit project that is currently underway. It's the 2000 Clarendon project, literally right on the Metro line. So our down payment assistance program, or MyPAP, is an assistance program that can help with closing costs and down payment for eligible home buyers. It acts as a second loan. So it's a subordinate or a second trust mortgage that basically comes alongside your first trust mortgage, or the loan that you get from a traditional lender. And MyPAP can be up to 25% of the purchase price of your home. And what that allows is for you to, number one, be able to come to the table with less money, so you keep more money in your pocket for the expenses associated with home ownership. But it also allows you to be able to afford a little bit more home. And we know how important that is in a very high cost region, in particular Arlington, where condos are primarily the most affordable housing stock that we have. So using MyPAP is certainly a really great way to levy some of those costs. So in terms of MyPAP eligibility, the household income must be at or below 80% of the area median income, and that's listed here. So for a household of 3, the maximum income that household could be earning is $92,880 gross, and that comes from all income sources. The other criteria associated with MyPAP is that you must be a first-time home buyer or have not owned a home in 3 years. Again, that 80% of the area median income. You must have a credit score of at least 660. Your first trust mortgage must be from a Virginia Housing approved lender. You need to have a debt to income ratio at or below 45%, and the debt to income ratio is essentially what you would be paying for all of your bills and your housing costs in relation to what your actual gross monthly earnings are. You would have to have a minimum down payment of 1%, and that would come out of your pocket. And the properties that you're purchasing are in Arlington. So this is an Arlington only program. And just really briefly, MyPAP is a loan. And so here just kind of highlights a little bit of what that structure looks like. It's a loan. It has to be repaid whenever you resell the property or whenever you refinance the property if you have enough equity. I highly recommend that our MyPAP loans be repaid upon refinance because then that allows the homeowner to take advantage of that equity beyond that and not have to repay the MyPAP loan. And MyPAP is also a very small shared appreciation model where the county would get our initial investment or the loan back on top of 25% of the appreciation. But I know that 25% is startling to a lot of people. I think it's really important for me to note to you that 25% typically does not end up being a lot of money. I mean, of course, it has a lot to do with how long you stay in the property and how much equity is in the property, but we typically see about a $7,000 to $9,000 shared appreciation amount that is due back to the county upon refinance or resale. But once that is repaid, there are no other restrictions associated with MyPAP. You are free and clear as it relates to our loan. And so this is information about who you can contact for MyPAP applications. My colleague Odalis Barrios will be happy to assist with answering questions. And then once you submit an application, just know that all applications must be fully completed in order for us to consider and to start the review process. And our application review may take up to 60 days. So moving on really quickly to the Virginia Housing Spark program, which Regina so eloquently highlighted today, but we have such an interest in this program, and we can barely keep the money in our coffers. But I think ultimately it's showing that that this is a public good. This is ultimately helping a lot of households by reducing their interest rate by 1%. The property must be located in Arlington. The property price may not exceed $525,000. And we see that income range from about 70 to maybe a little over 100% of the area median income. But those guidelines are listed on our website as well as the Virginia Housing website. But I would implore you to consult with your lender to determine whether or not that would benefit you. And then of course they would connect with us to go through the process of applying for those dollars. Next, I'm going to highlight really quickly our affordable dwelling units. So an affordable dwelling unit is a property that is made available to qualified moderate income first-time home buyers. And these units are subject to restrictive covenants. So I know that Vicente did talk about their restrictive covenant units, and this is basically very similar to the ones in Alexandria. So our affordable dwelling units, or ADUs, have AMI or income limits at 80% of the area median income. So that is the same income limit that we have for our down payment assistance program. These units are restricted in value. That means they are restricted in the price for which they can sell and be resold for. They're restricted into perpetuity. So that is essentially, that is going to be the case forever for these particular units, right? So, and what that allows is us to keep those units affordable for households that are of moderate income to sell and resell and to be able to benefit from a portion of the appreciation. It also allows homeowners to have fixed housing costs for that period of time, knowing that in Arlington and then even throughout the region that the rental market can be really challenging, and especially with the rental increases, not knowing what that looks like. If you are in a position where you can purchase but just are not 100% ready to purchase on the open market, this might be a good option for you. So let me go back really quickly. So we typically see about a 3.3% increase in the value of those properties, because those properties are valued in alignment with the HUD area median income increases. So if the HUD area median income increases 2.5%, then the value of an affordable dwelling unit would increase 2.5%. If the HUD area median income does not change from one year to another year, then the ADU value will not change. If the HUD area median income were to decrease, the ADU value will not move. So will basically stay the same as it were the prior year. Restrictions, again, associated with our affordable dwelling unit, they are restricted into perpetuity. The household must meet income requirements for all sales and resales. So once you purchase an affordable dwelling unit, when you are ready to sell that unit, it can only be resold to households that meet the income eligibility criteria. These units have primary residency requirements, essentially meaning that the owner would have to reside in the unit as a primary resident. And again, those restrictive covenants help us to safeguard the long-term value of the affordable dwelling unit to eligible borrowers, and it helps us to keep those prices affordable. These restrictions are attached to the property's deed, and they are enforced into perpetuity. They run with the land. So it's really important to note that it's not just an agreement. They are actually deeded in this way. And ADUs may not be used for any other purpose beyond primary residency for the owner, and they may not be rented out at any time. Really quickly, so we have an ADU project that is ready to go. We're really, really excited about it. It's 2000 Clarendon. Within this project, we have 4 affordable dwelling units. I, of course, wish we had far more, but we have 2 2-bedroom units and 2 1-bedroom units. The square footage range from 677 to 973. And these units will be sold via random selection drawing in February. So the 1-bedroom condo is priced at $308,000. The 2-bedroom condo is priced at $360,000. We can provide households with MyPAP, which is our down payment assistance program or down payment assistance resources in order to purchase these units. And it's really, really, at this point, important that if you are interested in this project, that you take a look at the slides that are provided here, give us a call to try to figure out what your next steps are, because we have a lot of interest in this project. So again, we're in a time frame between now and January 21st for the 2000 Clarendon project, where people can go and take a look at these units. There is an open house on December 16th and December 27th. During this time, you would be working with our lenders to get mortgage qualified. And then we have a deadline for qualified buyer drawing entries, which will be January 21st. It's basically right around the corner. But it's a great, it's really a great project. There's a pool, there is a fitness center. Again, it's right on the metro. There are a lot of other really, really great amenities associated with it. 2 of our units have balconies. The prime location, very walkable. So I certainly would say if this is something that sounds of interest to you, that you look into it ASAP. Yeah, so I think that's the gist of our programs. I tried to condense it the best that I possibly could, but I am happy to answer questions. My colleagues are happy to answer questions, and we hope to hear from you guys soon. Thank you.
Thank you, Akiria. So the next presenter is actually myself. So I'm Dana Lewis, and I am the Deputy Human Services Director for the City of Falls Church. And I will be doing a presentation on our home ownership programs. So I'm looking to see, bring that up. Okay. Can everyone see that? Okay, so we are starting a brand new homeownership program at the City of Falls Church, and mainly going to tell you about that. We do have an affordable dwelling unit homeownership program that we have had for several years, and the program has 17 affordable dwelling unit homes that are across 3 properties. And these homeownership units include townhomes and, oh, sorry, hold on just a minute. Just my screen just went away. Okay, include townhomes and condos. And so, just a minute. The only problem is that this program has been around for many years. People move into the units and they don't really move out. So we don't have any homes available under our current ADU homeownership program, but as soon as we do, we have a wait list where people can, apply to be in that program. So we saw that need, and so we are asking people to join our wait list because we're starting a new program. And so for this eligibility wait list, people must submit a preliminary application to be placed on the wait list. And the wait list is organized by priority, and applicants will be called on a first served basis priority. And the priority basically is if you live or work in the city, then you're going to have a priority over others who have no relationship with the city. And if you are a senior or a person with a disability, then you would be priority 1. So it kind of goes that's the priority, the way it goes. Households must not have more than $40,000 worth of assets. And so we will be serving people who range from 60 to 100% of the area median income. So that would mean for a 4-person household, your income could be anywhere from $77,400 to $141,900 for a 4-person household. And that we would be taking into account of everyone in the household who is an adult who works. And so for our affordable dwelling unit eligibility requirements, HUD suggests a household is to spend no more than 30 to 40% of their income on household costs. And so that is what we will be looking at for the program. So our new homeownership program, we just received this grant, so we're still finalizing all of the details, but the city has been awarded $3.75 million from Virginia Housing through a grant through Amazon for this new homeownership program. And the city is partnering with a nonprofit in the NHP Foundation to use these funds. We'll be purchasing houses throughout the city and selling them to residents for an affordable price. And we're looking to serve about 18 households. The program is expected to begin next year in 2022. So that's about all the details I have right now. We're in the process of developing marketing materials and we will be putting those out. So I suggest that you contact the information that I have up here to get on our wait list, and we will send marketing materials. We'll be doing promotion and all those things. But the best thing to do is to go ahead and get on the wait list so that you will be higher up on the priority when we do start reaching out to folks to give them the information on how to apply. And if anyone has any questions for me or for us, you can call this phone number. And at this time, I'm finished with my presentation, and we will move to the question and answers portion of the program. So my presentation is complete. So we'll go to the general, looking at all of the presenters for the questions and answers. So I'm looking at the questions. All of our presenters are back up on the screen. And I actually have a question. I believe this is for Belinda. And it says, sorry, I missed the topic on student loans. What happens if I have a balance on student loans? I think she was talking about that program that you mentioned in your presentation.
Okay, so let me preface that by saying I'm not the expert on this, but what I do know is that if you have the original document, so if you have a balance, it will look at what your monthly payment is, and that is what the lender will look at. Now, if you don't have your original documents, then 0.5% of that will be taken, and that is what they'll use for your monthly payment. So I recommend that the PowerPoint will be on the website, and that contact a housing counselor and they will go over the details, and that is for FHA. I'm not talking about a conventional servicer. I was only talking about how FHA will calculate if you're going to do an FHA loan. I do know that previously they were doing 1%, 2% and 1%, but now they're going all the way down to 0.5% in order to make the affordability for those with a student loan, so that monthly payment will be lower than it had been in the past.
Thank you, Belinda. As a reminder, if anyone has any questions, you can type them in the chat and we'll make sure that they get answered. I have another question, and I'm not sure who this is for, but it says, after a year on a job, could I try to start the buying process? I am finally making a better salary, but have charge-offs and missed the part about student loans, but I think this was related to that question, Melinda. But have 140,000 in student loans in deferral. Now my income is significantly higher, and I feel I will need to start paying huge amounts on my loan every month. I
I'll
probably
take a stab at it.
Excuse me?
Yeah, first part, and somebody else can do it too, because everybody, I'm not the only one. But basically what it is, as I had said in my presentation, yes, you should start looking at your plan of action. You would look at your credit report, you would look at your income, you would include your student loans, what your monthly payment would be. You would look at the full spectrum of your entire financial situation, and let a housing counselor help you determine where you need to focus and how long it will take you to get to a certain place where you know that you have sufficient income and the right budget so that you can start looking at purchasing a home.
Does anyone else have an answer for that question? Any of our other presenters?
I concur with Belinda, and I'd also say that if you are at a point where your income has increased, you want to ensure that you're looking at your other debts and just ensuring that you are not taking on other debt, because it could be one of those situations where your income increases and so you feel like, oh, I can buy a better car, or I can do more, I can go on more vacations, that sort of thing. You definitely want to be just as financially fastidious as you would be if your income had not increased, just so that you can weather the storm of, just trying to figure out what's going to work best for you, because there is, especially with regard to your student loan, there'll probably be some financial goals that you'll have to set in order to be comfortable in a mortgage.
Thank you, Akiria. Okay, so we will move on to our next question. And the next question says, are there any Spark sponsors for Alexandria City or Fairfax County? And I see Fairfax is not on the panel today, but is there someone who can answer that question? Maybe Regina, you might know the answer to that.
Yes, Arlington, Alexandria, and Fairfax have all requested spark funds. Unfortunately, Fairfax has used all of their funds for this year, and our next round doesn't start until July of 2022.
For Alexandria, we do have a Spark. The only requirements are that they have to live or work in Alexandria and fall under the income guidelines.
Okay, thank you. So our next question is, can all programs be combined with the Virginia housing programs? If someone could answer that.
That's a great question. No, all programs can't be combined, but I'll say most of them that you'll find as consumers, there is a way to use them in conjunction with us. What we look for in financing that is secondary to ours, and that's what we're talking about, is that those terms on that secondary financing or home buyer assistance that you receive is compliant with agency and insurer guidelines. And so that means that if you're going to do a FHA loan under the Virginia housing umbrella, we need to make sure that that second trust or that DPA or anything else you're going to use to assist you in that purchase also meets FHA guidelines. But that's why it's so important that you interview your lender, ask them about their knowledge of community lending techniques, and then work with them to make sure that you're compliant so that they can be compliant and get you the best deal possible.
Thank you, Regina. So the next question is regarding the Spark. Can I use it to just lower the rate? Do I have to take the loan too?
That's a great question. Spark is used differently throughout the state. And so just as Belinda mentioned overlays earlier that apply to FHA loans, sponsors are allowed to apply overlays to Spark to meet the needs of their specific community. And so some sponsors like Fairfax County had 0 overlays. They didn't care where you worked before. They didn't care where you bought your house or how much money you made. If you could do a Virginia housing loan, you could have Spark. Other regions may require you to use their DPA or down payment assistance in order to get Spark. So that's why it's important for your lender to reach out to the Spark provider and make sure that you meet the guidelines.
Thank you, Regina. Our next question is, and I think any of us could answer this, how do you measure household income? Average gross income, taxable income? I think they want clarity on that, if someone could take that question.
I can speak for Virginia Housing, and it depends on we have two different criteria. If you are getting free money, a grant that you never have to pay back, then we count all of the income coming into the household against those limits that I showed you earlier on the chart. If you are not getting any grant or free money and you're borrowing every penny from us, then we count against our eligibility limits the gross income of the borrower or borrowers on the loan. So free money, we count every penny that comes into the house. No free money, we count the income of the borrowers on the loan.
Gotcha.
I'll
Thank
chime
you.
in on Arlington there, and using Regina's example, we use the free money standard for all of our resources. So essentially, we count all of the money, all of the income that comes into the home, and we calculate the gross income for those households.
I'll say it's the same in Falls Church, the city of Falls Church, we do the same.
I will say it's the same in Alexandria. We count all the income coming into the household, and it has to be the gross income.
Okay, thank you. Belinda, did you?
Say who's ever going to be on the loan, who's ever applying for the loan, the borrower, the co-borrower, we will count everything that's coming in as well for FHA.
Thank you, guys. Okay, so our next question is also for Regina. And they may be able to get this information from your presentation when it goes up, but they said, can you repeat info on loan options for higher income people?
Okay. All of our loan products are traditional loan products that you've heard about probably all of your life. Conventional, FHA, VA for veterans and rural housing, or USDA loans. And so our income limits are higher than a lot of first-time homebuyer programs in the area, in the state. However, regardless of income, you can use all of our loan programs. So, except for our grant, and that's the free money. So we have a limit on that. But if folks earn over the limit for our grant, they still have access to 100 to 101.5% financing, and that's through using our first mortgage product and our plus second mortgage. So 2 mortgages at the same interest rate, 30 years fixed, no points, no prepayment penalty required, and it still helps you accomplish what the grant does, even though you're not eligible for the grant money.
Okay, thank you, Regina. This question is for Arlington County. It says for Arlington County, the Spark 50,000, is that immovable?
I'm sorry, can you repeat the question?
For Arlington County, the Spark, the 50,000, is that immovable? I'm not sure exactly, but that's exactly how they worded it.
I am not entirely sure what the 50,000 they are referring to. So if they want to clarify that.
I think what they could do is maybe we're going to have all of the presenters' information and they could email you directly to get clarification on that. I think that would probably be best.
Sounds good.
Okay. Our next comment says, good morning, great information. I have tried to purchase before and I didn't get a good loan officer who was aware of these programs and they're not really going out of their way to help. Do we have a list of officers who are aware of how to help us? She's from the city of Alexandria.
Yes, we do. We have a list of lenders who have a lot of experience and expertise on our loan products. Yeah, anybody who's interested on the list, you may want to call me or send me an email. And I would be more than happy to provide it.
Thank you. We are running a bit over time, so there are a few more questions, but I think what I'm going to do is once we pull up all of our presenters' information, if you want to, I can send those questions to the presenters and then they can reach out, or you can reach out directly to the presenters. So let's do that since we're running over time. And I want to thank all the presenters for coming today and giving us this great information. And this presentation will be available, I think, later on today if people would like to look at it. And as I said, you can send questions to the presenters directly. Thank you very much.
Thank you all.
Thank you.
Thank you.
Goodbye.
Goodbye.
Lord.